Well, hello folks, I'm L.A. Little and this is your daily NeoTA wrap, where we take a look at these markets and we do it from a neoclassical perspective. Each time we ask ourselves what happened today and what does it tell us about the coming ones. I do a show 4 times a week, every Monday through Thursday, broadcast at 10 o'clock Eastern Time and archived on YouTube. It's under the channel L.A. Little if you need to find it there. As far as today, what happened in these markets, today was Fed Day, and we did end up, but it wasn't a big day. We pretty much just ended up after a big rally. We sold back down. We ended up, a good 1/4%, anywhere from 0.15 to 0.25. So not that big. As far as the rest of the markets, it actually was the same sort of thing we've seen before. Yesterday we had some green all across the board. Today, not so, right? Most of the commodities, the stocks went up, the commodities went down, rates went back up again. That put bonds down, right? You can see the bonds here, bonds there. And so you're seeing the continuation of that situation that we've seen for about 2 weeks now. And the dollar much stronger. I'm going to talk about all that in a little bit more depth as we get along here in the show. That will be the focus tonight. The Fed itself. So let's think about where we are and in the context of what's happening. First of all, let's just look at the technicals together and see what we have there. The first thing you have to notice is the S&P 500. There's a spike up here. It comes within a point of the highs. Volume expands, but you don't test the high, so you actually didn't test with volume. That tells me it doesn't have to go back up there, and that's important to note. In other words, we've gone up there, we didn't quite get to the highs, we don't have to get back up there again. And so from that perspective, okay, so it may or may not go back. That's what the S&P is telling us. The Dow actually got over the highs, but I always discount the Dow a little bit given that it's just 30 stocks. But the Dow was over the highs. DD was the big mover there. And I didn't pull a quote or get a quote pulled at the end of the day on the Dow on these charts, but I did get it over here. So let me pull it up on this one. And let's bring it into 3 months, and you can see over the highs. So the previous highs, that top there was 17,161.50. Got over them, closes back under them. It is a closing high, but it is another test failure, but with volume. So Dow over the highs, test failure with volume. Then we move over to the other part of the story that looks quite a bit different. And that is if we go over to the NASDAQ, the NDX, and the Russell. The listed issues are once again the ones pushing, and they have, in particular the S&P has been the one pushing most of the year. NDX and NASDAQ along with it, the Dow, the Russell trailing, and Russell actually still negative on the year. The high on Monday, which was it wasn't a breakdown bar, I guess it was, it broke down that range if you remember. So we had a range here, we broke down that range. That bar's top, right? Those are areas that you look at to see, okay, what are you going to get on the way back up? That top price point on it is 45.67. We got up to over that actually and closed underneath it, and we had slightly lighter volume than yesterday, lighter volume than Monday. Folks, that's a failure. You go up, you can't get over it, you can't find new buyers at those higher prices, right? That's a failure. So that's a mixed market from that perspective. S&Ps don't have to test again. Dow actually fails at the high but has higher volume. IXIC, the NASDAQ, fails. NDX actually stays over that and has a little bit lighter volume, so the NDX is a little bit better off. That one could actually go higher. And then the Russell actually couldn't even get to that high. That high was 1160.06. The Russell only got to 1159.85, so it falls short of even testing and doesn't have the volume either. And so from that perspective, the Russell is actually the weakest one, has been the weakest one. The bounce not doing much for the Russell. So a very mixed bag on the indexes. If I look at the sectors, it's a different story. The sectors, you showed a lot of strength in a number of places. In particular, the transports, FedEx was out today with the news, their earnings news, that pushed that one up. The SOX was pushing higher. The XLF, which we'll talk about in a little bit, pushed higher with volume, actually closed at that swing point high, so it's not a break yet, but it looks like it will try to test again tomorrow. XLK still hanging at the highs. XLV up at the highs again. And so, you know, sector-wise, strength still looks pretty good. That hasn't changed. Overseas indexes, more of the same. Really didn't get anything more out of those. And then if we walk over and look at the OX markets, and what I mean by the same is Europe strong, the rest of the world struggling with the exception of Japan. And you can see it actually here in emerging markets. They pushed up today and then sold it all back off at the end of the day. If we go and look at what happened here though on the OX markets, the first thing you have to notice is the dollar. Dollar pushes higher, volume expands off the Fed. And again, we're going to talk about the reasoning behind all this, but that's what happened. And if you look at the bonds, they sold off on all ends of the curve. It didn't matter if you're looking at the 1 to 3 or you're looking at the 20. All of them sold off, despite the Federal Reserve not doing anything with that language, which Hilsenbroth so acutely reminded us or informed us yesterday, the Fed's mouthpiece. Here's gold getting hammered, right? The silver also pushing down. And so commodities once again getting hit, bonds getting hit, dollar going up, rest of the currencies getting hit. All right, so in a nutshell, what do we have? Well, in my opinion, what you have is you have another test of the highs probably coming tomorrow, but it just doesn't look like it's going to break out here. I don't see new money coming into this as a result of these breaks. The strongest one, the S&P and the Dow, they just simply got to the highs, tested them, had more volume, but couldn't close over them. If you get to new highs, higher highs, and if you don't find new buyers, then you're not going higher. You're going to sell right back down, and that's what's happening. And then if you put that in the context of the other indexes, which are weaker, and they're certainly showing a lot less strength, makes it very hard to go higher. The wild card, of course, is the sectors. Sectors still look pretty strong, and if the sectors are strong, that could get this push one more time tomorrow. And talking about tomorrow you got Alibaba. The IPO, you know, everybody's been waiting on. It's been all the press the last week and a half. That one's going to rock out tomorrow. They've raised the size of the IPO. They've raised the price. So if there was selling in other sectors, other stocks to raise money for that IPO, that will be done tomorrow, and the buys will take place. You know, in Alibaba. We'll see how it rocks. Yahoo, of course, is the best way to trade it up until it traded. Yahoo's up, what is this, from about 35 to 44, so a $10 rise on a 35 stock. That's a pretty good percentage. I suspect Yahoo's going to see a sell the news on Alibaba once Baba gets out of there, pushes up for maybe, you know, just tomorrow, or maybe pushes up for a couple days. Is a well-managed IPO, it looks like, so I wouldn't be surprised to see them get higher prices by the end of the day over the IPO debut price. So that, you know, Yahoo, if you're wanting to short it, I would come over here. I wouldn't go into Alibaba and short it. What else is happening? Okay, so the other thing that the other big piece tomorrow that's happening is the Scottish vote. If they secede, I suspect that's going to cause all kinds of issues in Britain and potentially in world markets in currencies. So that's another big item on the plate for tomorrow that may or may not cause more disturbances. And then there's also a rate decision in Switzerland. And honestly, I can't get my head around this one because the Swiss supposedly are defending their currency, but they're talking about taking the rates negative. it seems to me like if you're going to defend your currency, you take the rates up, not down. So I don't quite understand what's happening there. I guess I'll just see what the fallout is tomorrow and see how it affects other things. To me, the biggest thing that's happening is the currencies, which will be the segue into the next part of the show. But on the wrap here, the 10-minute wrap, looks to me like what you're going to see is you're going to see these markets try to press higher in the morning, especially with the Alibaba coming out. And then after that, it's anybody's guess. I would guess that you're not going to break out, though. It doesn't look like it. I just don't see the new money coming in. And so that's kind of the wrap. Let's switch to another topic, and let's talk about the Fed. Let's talk about what the Fed decision was today, what the impact is on the markets immediate and going forward, and then let's let's consider what all this means in terms of the fact that the Fed is ending its QE program and the fact that the dollar is benefiting from it. So let's pull back. Let's first review what happened today. So the Fed comes out. They basically didn't change anything in their statement. In other words, the considerable period of time was still there. The expectation of another 10 billion cut in the QE program. The QE program will end in October. They didn't say that, but that certainly looks like what's going to happen. All those things same. What did change and what didn't get a lot of press was actually in the statement there was one change, and actually in the press conference there was another one. Let's talk about the statement first. The other thing that was in the statement was that they expect, the Fed, the committee, and I kept hearing committee when I was listening to Yellen. I felt like I was in 1984 with doublespeak. But the committee decided that GDP is probably going to be less than they expected. Okay, so that bullish for stocks, right, in the sense that we're not going to raise rates. But when they start raising rates, they expect interest rates, the curve that they're projecting as to how fast rates will rise after this extended period is over, that rate rise is much more significant than it was. I mean, it's anywhere from 50 basis points to 100 basis points steeper than it was on the last statement over the next 3 years. What came out in the press conference, which was interesting, is it's 2014. In the press conference, Yellen made a statement that she expects that by the end of the century, by the end of a decade, they will have balanced their books again. So they're gonna somehow get rid of all this $4 trillion worth of bonds over the next 6 years. I don't think so. And if they do, I think it's going to have a huge impact if you go that fast. It's probably going to take 10 or 15 years to get rid of this stuff. And that assumes that you don't have to buy more, right, on the next recession. Especially, if there's another collapse. So this whole ideal of getting out was accelerated, and the ideal of interest rates going up was accelerated. That's what pushed bonds down today. That's what pushed the dollar up. I believe that was what was at work here. And the impact of that, immediate impact, is just what you've seen the last couple of weeks. That's a stronger dollar, weaker commodities, weaker bonds, right? And unless Fed chairmen, not the chairman, but the speakers hit the road and start talking different, that's the takeaway today. And I expect that's what's going to happen. The Japan is going to be helped by it. Europe is going to be helped by it. In other words, our rates and our dollar is going to go up. That's going to make theirs cheaper. Japan, Europe, they all want cheaper currencies. They want to devalue. They want to create inflation in their countries, right, and be able to help their exports. And so that's going to help them. It's going to hurt just about everybody else. And at least, if you look at what's been happening, that's what's been taking place. It's going to help banks, right, the financials, and that's why you saw the financials today do what they did, right? Financials popped up, right? Volume expands, they pop up, they test that top, And if you look at the financials on a weekly basis, the financials are up there, pushing highs. So the financials are helped because they can increase their rates that they're charging, and the rate that they are charged is the same. It's not any different. So that actually helps their spread and it helps them make money. That's, to me, the biggest impact that you see off the Fed today and what the Fed said today. And that actually leads me into one last thought, and this is more of a warning thought, and it has to do with the dollar. And so let me pull the dollar back up here. I use the UUP as a proxy because that's something you can all get to. And if I pull this back 5 years, you can see the big spike up, right? It's coming back into these areas. You saw this big spike before, okay? Let's pull this back just a little bit farther. I'm going to put it on 10 years and a monthly. And I'm going to zero in on this time period. And the reason for it is if you realize this is 2008. And what happened in 2008 was that we saw a fast spike in the dollar, right? And that fast spike higher resulted, well, I shouldn't say it resulted, it was a precursor. Let's put it that way. Because look at the spike. You went from 22 to 26 and a half, or 27. That's $5 on a 22. That's almost 20% in the dollar, right? So a little over 20% in the dollar in the space of 3 months. That happened simultaneous to the market starting to crash. August, commodities got hit, also got hit in September. By the middle of September, we saw the Lehman crisis and stuff starting to take effect. In October, the crisis was in full effect. That was the spike in the dollar. That was what was happening back then. Now, segue over and take a look at what's happening now, right? Because what's happening now is you have the same situation. I'm going to pull over here now. You're going from 21.25. You've only go to 22.53. So the first two legs up here is only, $1.20. So it's not a big deal yet. But if this starts to really spike and we start to see those kinds of increases again, maybe this is another precursor to some bigger problem taking place, and where that spike would really start to grow legs is if it starts getting over these highs, right? Especially if it gets over those. 22.53, remember 23 up to about 23 and a half, that whole area, that's a big zone that you don't want to see taken out in a fast way if you want to be long equities, right? You do not want to see this area taken out in a fast way. If it is, that's a problem. That's going to be an issue, right? That whole move would be an issue. So just keep that in the back of your mind. That's another fallout of what's happening here with the Fed and its signal on these rates. All right, let me go take a couple of, 2 or 3 members had questions. Actually, it looks like there was 2 of them, so let me pop over and look at those. And see what we got here. So the first one has to do with biotech, RTIX. It's RTI Biologics. The question here is, he's thinking about buying this. He's looking at the weekly time frames. So let me just pull that over. He's looking at the weekly time frames, and so you had a big spike up on volume. You get over it, suspect. You're coming back in to do a retest regen. Now this is on a weekly. We know that if you come back within 6 bars, you have a good probability of getting all the way to the bottom of it. So that's the first warning sign that you have to be aware of. If this thing does come back and gets into here, right, that could be a problem if you're trying to go long. Second part of this story here is if we look at the daily is coming back into that spike bottom, right? That low is 491. Swing point high here, it's over 6 bars, right? First time back. And that volume, there's no comparison. So on a shorter term basis, it doesn't look like you're going to get the retest regen on that weekly. So that would be my first note. So this low, again, 491, and if we pop back over and look at the weekly, that low on the weekly, 491 as well. That's the low that you want to be careful with. You don't want to see it get up underneath there. If it gets up underneath there very far, then you're going to have to come right back out of this thing. So that would be the way I would try to trade that. If you want to go into it, I would trade it as close as I can to 491. You got the 5 today. That would be the place, and just have a very tight stop on it. Now, of course, the biotechs, you can get large spikes up or down, and those can be overnight on you. So that is a risk you take, overnight risk. So that's biologics. Let's look at the other one. The other one is ATEC, which is Alpha Tech Holdings. I didn't look to see what this was. Let me take a quick look here and see what it is. So ATEC. Let's see what these guys do. So they're in the XLV and medical instruments and supplies, and they don't make any money hardly. 204 revenue growth. Yeah, not much. Okay, so they don't have a lot of volume. Actually, we have pretty good volume. 904. They just had this big spike that skews it. Okay, so this gets over the highs. Let's look at the weekly. Alright, so you got to break out on multiple time frames here. And that top is 188, and you tested it today and you closed under it. The ideal place to try to buy this would be back into this area, right? That would be the ideal spot, right? Because that's a quick pullback back to around 175, 180. 175. That would also be the bottom of this bar, 174. Ideally, you would like to see that next week. In other words, get your breakout this week, both on this time frame and on your daily time frame, and then make your buy. I don't know if it will give you the ideal, because the build up here is pretty good. So, if nothing else, you try to buy in here at this high, 175. So anywhere from 170, 175 would be the spot. And again, you don't have to give it very much. You can put a tight stop on it. I would probably put the stop right up underneath here. That high's low is 162. This one's 162. And we saw the beta was 08. So, you put your stop at 158 or something. You don't have to give it hardly anything. Okay? All right. Good questions. So, in summary here, mixed market in terms of signals. On the flip side, sector's still pretty strong, so we may see these sectors keep pushing. And that would give us a mixed market tomorrow. After that, with a little bit more news, you got a lot of variables coming in tomorrow with the Scottish vote, and also with this Alibaba IPO in the morning. And then there's some numbers coming out, economic numbers on Friday, and options expiration on Friday as well. So it's going to be somewhat of a volatile, probably couple days here, I would think. And if they can't find new buyers at the highs, it's back the other way again, folks. Thanks for joining me. Have yourself a great night. Take care, and I'll see you next time. Good night, folks.